Good morning, everybody. Welcome back to Strongman Personal Finance. We got a sponsored video. I received a direct deposit into my bank and I said, "Woo!" So in this video, we're going to cover Illumina Incorporated, ticker symbol ILMN. And what we like to do, first off, is look at past performance of the stock. Now, we see that over 5 years, it's down 61%. It's because of a very specific event that happened to this company, and we'll discuss that in a second. But the stock is down massively. And there's probably people out there that are like, well, the stock went down, it's going to go back up, bro, right? Maybe, maybe not. Now, what does Illumina, illuminate my schluminate do? Illumina develops, manufactures, and markets life science tools, Biotech company, and integrated systems for large-scale analysis of genetic variation and function. Now, as a certified public accountant, I am highly qualified to talk about biotechnology. Not really, but I can look at the financial statements. It operates through Core, Illumina, and Grail. Oh, we're going to talk more about Grail, the Holy Grail. The company offers sequencing and array-based instruments and consumables, which include reagents, flow cells, and library preparation. Okay, so it's a biotech company. Now, let's go ahead and look at some of the basic statistics. Market cap of $18.5 billion on revenue of $4.46 billion, with net income, trailing net income of negative $4.19 billion. Now, you may start laughing, right? Because their net income is basically as negative as their revenue. But that's from a goodwill impairment, which happened one time. And the one time it happens, your cheeks get clapped together until they bleed. Okay? We're going to talk about that later. This company isn't that unprofitable, but they did have a huge impairment, which massively infected their earnings over the last 12 months. Shares outstanding, I mean, we can look at the growth later. Earnings per share, we know that's negative. That's based on net income and all that stuff. And let's see, forward PE is 86. Okay, so I guess they're going to be highly profitable in the future, right? And there's a price target of 212 according to Wall Street, which you can always trust analysts, right? They know so much. They have all these price targets and all these cloud stocks, and it never seems to work out. So let's look at the overall financials. So quarterly financials, we can see that revenue has trended up over time. It's growing pretty significantly. It's not the most 10x my Hinhex revenue, but it's growing. Gross margins are high, but trending down. Operating margin over the last couple of quarters, if this thing actually pops up, is now negative. Okay, so in the past, they were profitable. They were making money, because they have products and software and services. But over the last year, it's trended negative, which is probably why the stock has dropped pretty massively. On top of that, we can see that one massive quarter where they had to impair or write down the intangible asset of goodwill on their balance sheet. That's why you see that one negative line, and that's vertical line. And that's why their profits over the last year look so bad. And obviously their profit margin over the last couple of quarters is bad. Free cash flow, you can see their cash flow is constricting as well. So basically, revenue's growing, right? But margins are contracting, and their profits have turned negative. Even without the impairment, their profits have turned negative, and their cash flow is very, very constricting. We'll see if that's because of more capital expenditures or if it's just because their operating cash flow is going down. The balance sheet, we're going to look at their quarterly report. So we're not going to worry about that on here. I don't trust stock analysis when it comes to balance sheets. All right. Operating cash flow. So we can see the operating cash flow itself is trending down. So it's not that they're spending more on capital expenditures, which can make free cash flow negative. They are literally collecting less cash from their core business. Okay, it's been on a downtrend over the past year and a half. Capital expenditures, investing in fixed assets or software or whatever, they've cut it a little bit. They've cut their capital expenditures a little bit, at least over the last couple of quarters. Let's see if they've issued any shares. So we could see in the past, they were buying back shares up till about the end of 2020. And now they've been consistently issuing shares. Okay, so we got declining cash flows. We got share issuance. Let's see debt. Okay, it looks like net on net, they've been packing on more and more debt. That's what happens when you have very tight cash flows or you start to have negative cash flows. Okay, acquisitions. Look at this. So we see they had a huge acquisition, and then right after that, they had an impairment. They had a disastrous acquisition of this Grail thing, and it really screwed the company. Okay, so overall, we can kind of see we have a pretty, decent picture of the company overall. Growing revenues, contracting margins, contracting cash flow, horrible acquisition, and I don't know what's going to happen to this company going into the future. Okay, so here's their website. 25 years of innovation. That's a word I love to see on any website. Products, they make instruments, sequencing platforms. I don't know what any of these things are. Kits and reagents. I guess this is testing stuff. Selection tools, gene panels, library prep. They have some software. I don't know if anybody recognizes this because I don't. They have services. I'll show you a service. And popular products. Okay, so that's basically what they do. Now, one thing I noticed is that I checked out the management team, and they have their CEO as Jacob Thaysen, PhD, Mr. Doctor here. And you notice he joined the company in September 2023. Brand new CEO. Okay, and he came from, it looks like, he was a senior vice president of Agilent. Okay, so brand new leadership. Now, there's other people here that have been working here a lot longer. Here's the chief technology officer. Let's see how long the CFO's been here. He was also appointed in 2023. Okay, so we have a new CEO and we have a new CFO. But most importantly, the chief people officer. How long has she been here? Does it say? No. That's a joke, of course. Basically irrelevant. Okay, so let's look at some news. So here's Carl Icahn, Mr. Investor, Icahn Capital, that stock that got nuked from orbit. He sues Illumina board for violating fiduciary duties. Now, this is in relation to the Grail acquisition, this Grail company that they bought. And basically what happened is they bought it, and then the European Union said, you can't actually do that. And then they had to impair the goodwill. That's basically what happened. Now, I had the financial report that kind of specifies exactly what happened here. So it says we test goodwill for impairment annually, which is what you do as an accounting. You always test goodwill, which sits on your balance sheet for impairment. And some stuff happened. On July 13th, 2022, the EU General Court ruled that the European Commission has jurisdiction to review our acquisition of Grail. They issued its decision prohibiting the acquisition. Based on our interim analysis, we concluded that our Grail reporting unit's carrying value exceeded its estimated fair value. As a result, we recorded $4 billion of goodwill impairment related to our Grail reporting unit. So basically, they paid a ton of money to buy Grail. And then after they bought it, they said, oh, wait, I think we might have overpaid for this. And then they had to write it down. And they recorded a $4 billion loss. Okay? So there are some concerning things going on here. Number one, brand new management team. They probably brought in new management because of the Grail acquisition. Brand new, untested. I mean, they've had jobs before, obviously. They're not YouTubers. But brand new management team. Horrible acquisition. And just declining margins, at least overall. So there's a lot of concern here. Okay, let's go look at the balance sheet. Let's go look at this balance sheet, okay? What do we got going on here? This is the most recent one I could find, I believe. So cash, let's see, any major changes. So they have $3.2 billion of current assets, that's liquid assets, and $2.3 billion of current liabilities. I have this troll commenter that always gets mad when I say this, but I'm going to say it anyway. It's probably not going to go bankrupt within a year. Okay, so far, current assets to current liabilities. Looks like they can pay their short-term debts. They have enough cash to do that. Let's look at long-term assets. Property, plant, and equipment, really nothing there. We saw in stock analysis they're not really buying a lot. Goodwill, they still have $3.2 billion of goodwill. Okay, before this number was 7-something billion. Now, when that number goes down, accounting is all about debits and credits, right? So goodwill is a debit. So when you have to remove it, you credit it, and then something has to be debited to offset it, and that debit is a loss, which goes on your income statement. Okay, so this was $7 billion before. It's not showing here, but it was $7 billion before, and it went all the way down to $3.2 billion, and that was what slaughtered them. Right? Intangible assets just went down because of amortization, probably. So their long-term assets are about $8 billion, and their long-term liabilities are Yeah. Honestly, their balance sheet's not catastrophic. Like I don't see any major risk factors. They have, even if you exclude goodwill, their long-term debts, they're a little bit higher than their property, plant, and equipment. Most of their assets are intangible assets, goodwill and patents, trademarks, whatever rights, whatever they have on there. But it's not the worst balance sheet in the world. Okay, let's see. Common stock, a little bit of increase in shares. We saw that. Accumulated other comprehensive income. That's irrelevant. We don't have to talk about that. It's so small. Retained earnings has gone down. Looks like because either they're probably recording losses. And treasury stock. Oh, they did a little share buyback. That's cute. Okay. So let's look at revenue. So products revenue year over year has gone down and service revenue has gone up. So their main category has actually posted declining revenues. Okay. Let's look at the margins on their product revenue. So I can tell you right off the bat that their revenue for products has declined and their margins have declined as well. So they have declining margins. It's still pretty healthy, but they have declining margins on their products and maybe even their services too. Let's see, 286 divided by 106. Yep, so margins are declining for products, confirmed. They dropped about 2% on the gross margin side. And then, let's see, services. I don't know, 175. 48%. That's funny. Is their service margin smaller than their product margin? That's pretty funny. 69 divided by 156. 55. Yeah, so their service margins have actually dropped like 10%. That's funny. You would think products would have lower margins, but whatever. Okay. So revenue is declining for their main category and margins are contracting. Like it's not even because of the goodwill. Like, I don't know. There's a lot of concerns here. R&D going up a little bit. Selling, general, and admin up a little bit. Margins are contracting. Expenses are increasing. Wow. I'm just very impressed here. So what do I think about this company? When it comes to investing, I could say with confidence, oh, this is going to 10x because of this. But nobody frickin' knows, okay? But I just know what I'm seeing here. I'm seeing horrible revenue growth. I'm seeing contracting margins on all of their categories. Brand new management team. Horrible acquisition that got smacked down by the European Union, the Commission. And now they're getting sued by Carl Icahn. I mean, I'm not going to tell you the stock can't vertical line. I mean, it could. Some positive news could come out. But I personally don't like this company. I don't like biotechs. It's just, most of these are just like gambles. Like, oh, please solve a problem. Please, please. And then they just dilute and lose money. And then every once in a while it happens. So that's my thoughts on Illumina. Have a wonderful day. Cheers.